Welcome to FOMO Consulting for your daily MC stock analysis video on Wednesday, May 19th. Ladies and gentlemen, today is the day we needed. Soon is the day we want. And make no mistake about it, nothing has changed. The apes are winning, the diamond hands are winning, and the retail investor is winning. So if you find the video informative and entertaining, please like, share, comment, and certainly subscribe. It's a newer channel, and I would appreciate the support. Let's get into the video. And as always, I would like to thank each and every one of you who has liked, shared, commented, and certainly subscribed. It means the absolute world to me. Thank you. Let's start with a quote. We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard. President John F. Kennedy, as we prepared for the space race. And no doubt we are doing things not because they are easy, but because they are hard, and soon we will land on the moon. So let's look at the broader market today. Overall, we had a pretty rough day in the market. Major selling pressure today. Did have a bit of a recovery, but overall, pretty rough day. Dow closed down 164 points. Did make a recovery at one point. We were down 400 points. NASDAQ down 3, made a nice recovery. S&P down 12. So overall, AMC performed pretty well under the conditions, I would say. Let's look at how AMC did today. We closed down $12.64 or $1.39 or 9.91%, up a bit after hours as usual. Overall, as you can see, AMC followed the broader market as shown below. Major sell-off in the morning. Keep in mind we are tied in with ETFs and other things. So overall, certainly the shorts took advantage of the day and it applied additional selling pressure to get the price points they wanted. But overall, we held a very good level today. So let's look at this perspective. So this is the hourly chart. We've certainly had a very bullish run over the last 8 to 9 days since earnings. As you can see by the red illustrated trend line, certainly not technical analysis, but just to illustrate where we've kind of broken through that today. I certainly believe that is a good thing. We are cooling off a bit, as you can see at the RSI at the bottom as well as the MACD. We have been pushed today into oversold. However, previous days we've been certainly in the overbought. So it's finding a balance, and I think it's a good thing. So let's look at this perspective. So you can see at the top, red trend line I've illustrated. You can see where when we ran up in mid-March, we got in, pretty far off that trend line, right? And we kind of corrected. We came back down, touched it, most recently by earnings, and we've bounced off of that, and we are continuing our upswing. If you look, we really kind of needed today to kind of bring us back closer to that trend line. We got a little bit overbought. If you look down at the bottom at the RSI, the last time we really got over the RSI was at the baby squeeze. We needed to kind of correct just a little bit, cool off. So today I think was actually a good day, but our calls and the scenario has not changed one bit. So a little bit of news, nice little article here. Could AMC be on another short squeeze run? The answer is most definitely yes. So there's a lot of things going on in the market, a lot of funny business. You got the crypto, you got crashing, you've got all these weird indicators going on, a lot of sell-offs, even in the big tech stocks, blue chips. So it makes our minds suspicious about what's going on. So why not listen to Elvis's Suspicious Minds before the market opens tomorrow? So let's look at the Ortex data for today. So estimated short interest, pretty much about the same. Estimated short interest percent of free float has actually gone down. That is good. I'll show you why. free float on loan has gone down substantially. I'll show you why. Shares on loan has gone down by about 9 million. That is good to help us, certainly. And I'll show you on the indicators. Days to cover has gone down just a bit, but nothing substantial. Cost to borrow gone down about 4 points, and utilization has skyrocketed back closer to the 100% at 96.02, which means they borrowed shares today to try to knock us back down, as evidenced by the price action today. So a couple other things. We are at 63.8% retail owned. Institutions have increased their position by 1 today. We had 87 million in total volume. Short shares available, 4.5 million by Fintel, if you believe that. Short borrow fee, 10.66. These are all very good indicators, and I'll show you why. So this was yesterday's Ortex chart I showed you. So you can see the weird looking indicators, especially the utilization fell off like off the cliff, right? So look at today. So it's corrected, a little healthier, possibly a glitch, who knows, from yesterday. However, what I want you to focus on is that mid-March run and also the baby squeeze. So let's start left to right. Baby squeeze, you can see the indicators fell off hard. We ran up in mid-March. You can see where they exited their positions. They borrowed shares. The price ran up. We are now in that exiting position, as you can see by the indicators on the right, where I have the red trend line. All of those trend indicators are now heading downwards, which means they are exiting their short interest positions. They are borrowing anything they can. Right now, by my estimation, they are recycling 10 to 12, maybe 14 million shares. I have no doubt, based on the run-up we had over $15 the other night, a lot of people sold at that point, which obviously opened up the opportunity for them to grab a lot of shares they've so desperately needed. So they're recycling those shares as of today. So this, again, closer view, 3-month view, weird looking indicator from yesterday. Look at today, cleaned up a little bit, but you can clearly see on the left the March run-up where they exited their positions. They got out, price ran up, they borrowed shares simultaneously just to short it right back down. We are in that scenario yet again, but they have far less ammunition. They are out of ammunition. They have those 10 or 15 million shares. They are desperately trying to get out of their positions. They are trying to short this down, and keep in mind, when they short it down, they're trying to get a price as low as they possibly can before they start covering. No different than us, right? We want to buy low, sell high. So that's pretty much what they're trying to do as well, but they have the unique advantage of being able to force the price down. So let's look at what they were up to today on the borrowed shares. So market open, they returned 737 million. They borrowed 3 million. They saw the futures on the broader market, and no doubt they took these shares and they pounded us down from the opening. If you look at the return shares at market close, they returned 14 million, almost 15, borrowed nearly 5. They had a borrowed change of 10 million that they returned, which means they got people to sell. They had some additional availability, but they are just playing around with this 10 million shares. So keep in mind, they have these available for tomorrow. So I have shown this chart before, and I'll show it again. We cannot go to the moon until we break the $14 wall. We have to stand on the ruins of the wall and claim victory. We have to hold it for several days to make it a support level. At that point, I have no doubt they will exit their position and we will squeeze. So again, go to the moon, break the wall. Let's look at the options today. Decent sales today, nothing monumental, but an awful lot of puts and calls, likely hedging for this Friday. A lot of money out there. Obviously, people are trying to take advantage of a high price point. I still see a very bullish scenario in this. And so as you can see, we're still very bullish on the options, 2.5 nearly to 1. My anticipation is as we approach the squeeze, the big money will shift over to the puts. We should see more of a 50-50 type scenario is my anticipation. But right now, everyone is continuing to believe that there will be a price increase in the near future. One other article wanted to share is Tuesday's option volume of 30.8 million contracts resulted in net open interest growth of 4.5 million calls and 3.23 million puts. The largest growth was Tesla, Wells Fargo, and RAMC. So, shown this before, let's look at the battlefield. This is the extremes as I see it, around $11 to $16, expiring this Friday. They're going to try to get it low. We're going to try to press it high, right? The fight is always in the options. So I've adjusted this just a little bit. We're right around 12 on the low side, 15 on the high. There is a ton of open interest on the call side. As you can see at the $12 level and the $11.50 level, there's been a substantial increase in puts. I do believe we're going to have a fight at 12. At least they're going to try to force it down, which is why they took advantage of today. We'll see how it goes for the remainder of the week. But I believe certainly this is the true battlefield between 13 and 14.50. We close at 13.01. We put a lot of calls in the money. We close above 14. We put 26,000 contracts in the money. So the fight is on for the next 2 days. As always, I have skin in the game. I bled today just like you, but I am diamond hand to the end. I still believe bold prediction 13 to 14.50 is the range. That is where we will close. I'll tighten this up tomorrow, but I do believe we will close somewhere in this range. It just depends on who wants it more. So let's close with a quote. Stand straight, walk proud, have a little faith. Music lyric from Garth Brooks. Nothing is more true. We need to stand up straight today, walk proud. We've accomplished an awful lot, and have a little faith. We're on the move. We're heading in the right direction. Nothing has changed. Have faith, my friends. Have faith. So as always, I want to thank you for watching. If you found the video informative and entertaining, I hope you like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I appreciate support. But overall, I hope your life is full of green candles. I'll talk to you soon. Take care. Bye-bye.